Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 26th, 2025. I am Luna.
I am JPMorgan. And look at what's next. Today we're unpacking the market's recent rally, looking at the key macro trends influencing how investors are feeling, and flagging some critical upcoming data that could really, spark some volatility. Think of this as your shortcut, basically. A way to stay informed about the really critical financial moves without getting, bogged down in every single detail. Okay, so let's dive into this past week then. Wall Street certainly finished strong on Friday. S&P 500, Dow, Nasdaq, all closing at or near those all-time highs. The S&P 500 actually marked its fifth record close this week, didn't it? Hitting 6,388.64. So what were the underlying factors really driving that?
Well, what's interesting is the mix. You've got optimism around potential new U.S. trade deals, Japan, the EU especially, and that's combined with this continued, real enthusiasm for AI innovation. Plus, honestly, pretty robust corporate earnings. Something like 80% of S&P 500 companies have actually beaten expectations so far. That kind of widespread outperformance, it suggests maybe underlying corporate health is stronger than some thought.
Despite the tighter money situation.
Exactly. But it also makes you wonder how much good news is already baked into prices.
Right. And even with that broad rally, we saw some interesting divergences. Intel shares, for instance, fell almost 9% after their outlook wasn't great. And Tesla, General Motors, they both had weekly losses. But then you see a company like Deckers, the footwear maker, surge 11% on strong results. What do those kinds of splits, like with Intel or Tesla, tell us about how selective investors are being right now?
Precisely. It's a very clear signal. Even when the overall market's rising, investors are definitely discerning. They're looking at fundamentals, not just riding the wave. And it's interesting, while stocks rally, those traditional safe havens, they're still in demand.
Like gold.
Yeah, gold's near historic highs, mid $3,300. Bitcoin's holding strong too, around $117,000. Seeing demand for these assets alongside stocks suggests investors are kind of hedging their bets, right? Guarding against potential instability even while they participate in the rally. It's that cautious optimism playing out.
Fear and greed coexisting.
You got it. And bonds are stable too. The 10-year U.S. Treasury yield is hovering around 4.4%. And importantly, TPS, that's Treasury Inflation Protected Securities, they have positive real yields near 2%.
Meaning your investment is actually beating inflation.
Exactly, which is a significant draw for bond investors right now.
Okay, so that covers the immediate market moves. But let's zoom out a bit to the bigger picture, the macro currents affecting decisions. President Trump's recent comments seemed a bit, mixed, didn't they? He mentioned like a 50-50 chance for a U.S.-EU trade deal and then hinted at potential Fed rate cuts after meeting with Jerome Powell.
Yeah, those kinds of signals definitely sway sentiment. Though the overall central bank stance has been pretty steady globally. The ECB, for example, kept rates at 2% this week. And actually, bets on a U.S. rate cut have eased off a bit. It's now around a 60% chance for September, which is down from where it was, probably due to those sticky inflation numbers.
And that less aggressive Fed stance helps the dollar.
It does, yeah. Relative to other central banks, it makes the U.S. dollar look more attractive, gives it some support.
And meanwhile, those trade negotiations, EU, Japan, South Korea, they're still ongoing, trying to head off broad tariffs with that August 1st deadline. That's a huge point of both hope and, uncertainty.
Absolutely. And that August 4 deadline, that's a major event risk you really want to keep an eye on. Volatility seems pretty likely to pick up next week.
So looking ahead then, what are the key events that could really set the market's direction? You mentioned the August 1st tariff deadline. We also have the Fed policy meeting coming up late July. Expectations are mostly for a hold, I think. But any shift in Powell's tone could definitely jolt things.
Oh, absolutely. Any nuance there will be closely watched. And then we have major tech earnings next week, some of the really big ones, the Magnificent Seven.
Apple, Amazon.
Meta, Microsoft, Their results and, crucially, their forecasts will really set the tone. These companies just have such huge weight in the indexes.
Plus, we're getting key U.S. inflation data. The PCE index, which the Fed watches closely.
That's the one.
And the U.S. jobs report, non-farm payrolls. That gives us the read on employment. Both of those will heavily feed into what people expect the Fed to do next, right? Could cause some big swings.
For sure. So, the overall market outlook feels, I'd say, cautiously optimistic. There's strong momentum. But with all these major events packed into next week, volatility seems very likely to increase.
Okay, but here's maybe the tricky part. Momentum is strong, yes. But we can't ignore the underlying risks, can we? You hear about U.S. stocks being at historically high valuations. And margin debt, money borrowed to buy stocks, has surged above $1 trillion. What does that level of valuation and leverage mean for market sensitivity?
It means there's less room for error. Basically, even slightly bad news could potentially have an outsized negative impact. Things are stretched, so the next, say, 24, 40 hours, and certainly the coming week, looks set to be very news-driven. Staying informed, being prepared for that potential volatility that's really key for you. Ultimately, even when things feel bullish like this, maintaining a balanced approach, thinking about diversification, practicing good risk management, that's always essential.
So wrapping this up, what does this all mean for you? We've got records being set, but these major potential catalysts right on the horizon. How do you balance that excitement about gains with the very real need to manage risk, especially in a pivotal week like the one coming up?
Yeah, it really leaves us with a big question, doesn't it? In a market that seems fueled by both optimism and quite a bit of leverage, how much of this current rally is truly sustainable? And what signals, maybe from the bond market or from the central banks, would really tell us if the underlying trend is starting to shift? Definitely something for you to consider as you navigate the week ahead. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver days key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.